Hello, and welcome to Industry Reactions. Industry Reactions is a weekly briefing on industry events, changes, and featured trends that impact your business. We're your hosts, Rick Honer and Mark Friedel from ChemPoint. You can find Industry Reactions on YouTube, LinkedIn, and as a podcast. For those watching on YouTube, make sure to hit that subscribe button, ring that notification bell, and smash that like button. We plan on discussing issues that impact the global industry and help you uncover new opportunities. We also hope this will provide market intelligence that will keep you ahead of changing conditions.
All right, and we'll start off this week looking at some of the macro conditions in our industry. The first index that we'll cover is the U.S. Chemical Production Regional Index. And for those who may or may not know, this is a 3-month moving average. So June numbers came out. So it's a 3-month moving average looking at June, May, and April. And like many indexes, this index has been very positive. It was up over 3% in the month of June. And as you can imagine, that was that was after some declines we saw in May and April, because those months, as a 3-month moving average, factored in some of the declines we saw or disruptions we saw in the Gulf Coast due to some of the winter storms.
Cool. And in a similar report, the monthly report out from the ACC for U.S. specialty chemicals market, volumes rose a little under 1% in June, about the same gain as we saw in May, which, you know, when you compare that to pre-coronavirus levels, they're still off around 4% from those levels. Though I would note that even though volumes are off, I would imagine pricing and margins are painting a lot better picture than the volume picture is. As we've talked about in many of our previous episodes, pricing and earnings are off the charts for most producers in this area. Also, when you look at the recovery, it's basically been a V-shaped recovery since we hit the bottom. And there was a lot of discussion. I remember going into this, whether it was going to be U-shaped, what it was going to look like. But it's good to see a V-shaped recovery. Clearly, that's much faster for everyone, though it is causing some hiccups in the supply chain along the way.
Yeah, I remember last year this time, people were expecting that swoosh recovery. Yeah. But it's truly been a V or K-shaped recovery. It's been very quick to come back. And the next index is the Chemical Activity Barometer. The July numbers have already come out pretty early here. And again, this one's more of a forward-looking indicator. And again, it continues to climb. I think for the month of July, it was up 0.5%. And it was up, you know, almost 1% in June. It's been climbing steadily. It's actually plateaued a little bit. It's starting to, the gains are starting to slow down a little bit, so it might be at its peak. Who knows for sure, but year over year, it's way up. And Rick, as you said, a lot of these earnings calls were coming in last week and this week. A lot of companies in our industry are posting record quarters, which we all expected. So yeah, let the good times roll, I guess.
Let's take advantage of that long sunset. All right, and an interesting story coming out of oil and gas. So big oil and gas companies have been pushing hydrogen as their alternative or green alternative, but there's still some really big obstacles in that fight. So BP, Royal Dutch Shell, and Total are all pushing $1 million hydrogen projects, all with government support, as they try to define their future role in a world less reliant on fossil fuels. But, you know, when I talked about the hurdles, there's a couple of them. First, most hydrogen is made from fossil fuels via natural gas, which is a problem if you're trying to get a renewable resource. So the challenge is to produce it renewably on an industrial scale that reduces the cost enough that it's a viable solution. Next, which is just a little problem, is that hydrogen is explosive, so it makes it more difficult to store and transport. And last, green hydrogen's really expensive because of the electricity used to make it. And so green hydrogen is a long-term goal, right? It's for these companies to shoot at, but in the interim, they'll use carbon capture technology as a way to clean up the gas. So a long-term goal, but a lot of hurdles that they need to address and clean up.
Yeah, sounds great, but when the rubber meets the road, it's a little bit more challenging than people think.
Yep.
I'm sure we'll get there. All right, and the next story, a little surprising to me, was really talking about how the U.S. refineries have been missing out on this boom in oil prices and in fuel. And I just think that some of these refineries and rigs have not come back online fast enough. But basically, the story talks about is how they have not profited as much as they could have. They've been forced to buy more expensive oil overseas. The U.S. has been, trying to mandate and incentivize companies to go into biofuel, and really those international flights that require that very expensive and profitable jet fuel just isn't there at all. So, yeah, some of the U.S. companies just aren't benefiting from this right now.
Yeah, that's surprising to see. All right, and an interesting story here around building a modern car. So, when you getting away from oil and you're trying to look at electric vehicles as a potential alternative in the vehicle space, when you start looking at it, the question is how many chemical elements does it actually take to make a car? And it's 76 is the answer. And so you might ask, okay, so what are we trying to get at? I think at the end of the day, it's an issue as we've gone through this year. Sourcing chemicals, short supply, supply chain disruptions, the list of potential pinch points grows and cascades exponentially as you add more chemical ingredients there. And so more problem areas for supply and producing automobiles. Another factor in this is that in the shortness of supply, you can have these huge price escalations, which, when you're trying to get people to adopt electric vehicles, if the pricing is too high, it'll hamper or dampen adoption of those vehicles.
Yeah, electric vehicles is just a different animal and a different beast. So you need to make sure we've got the infrastructure in place to be able to support the slow evolution to electric vehicles. All right, next in the news is Olin. They put out a statement saying that they will slow the supply of their chlorine materials to producers of titanium dioxide. I think what they're trying to do is there's limited supply, and they're really going to push some of their supply towards more higher margin, higher value applications as some of these titanium dioxide producers contracts start expiring. So yeah, all that can tell me is that get ready for chlorine prices to start going up.
Yeah, that's being very selective about where you sell. All right. So we've got actually a sad story coming out of Texas. You may have already seen this or heard about it, but there a leak resulting from a cap that burst on a line of acetic acid at LyondellBasell's LaPorte, Texas complex caused the death of 2 workers and injured 30 others. The good news, the leak has been contained, but ultimately this is something that you don't want to see happen in our industry or report.
Yeah. And Rick, sorry you had to draw the short straw on reporting this story because it is pretty sad. And not to diminish, the people and the lives, but acetic acid, that's been a product that's been under very, very tight supply this year. I know at least 2 force majeures, probably more. So yeah, kind of a bummer of a story all around. All right, and moving on to Chemours, they are back in the news. We talked about how they were expanding a mining operation for their titanium business. Gosh, it feels like just a couple weeks ago. In this story, they're selling one of their mining businesses that produces cyanide for something north of 500 million in cash to Droslovka Holdings. Excuse the pronunciation. They're a Czech Republic company. They also had recently acquired a similar sodium cyanide business from Sasol recently. So it sounds like they're going heavy into that. And Chemours is now exiting.
All right, and then nod to your earlier story or comments around earnings. One of those companies that's been experiencing a solid earnings is Huntsman. They're doing very well and plan on using that strong balance sheet to support some bolt-on acquisitions. In a recent earnings call, company execs said they would, quote unquote, aggressively pursue M&A opportunities. So they're clearly signaling that they're looking for opportunities to bolt on to their business.
Yeah, they sold that Indorama business a couple of years ago. My guess is they have some extra cash. I don't know the terms of that deal, but my guess is they have extra cash and they need to go spend it. And they're looking to acquire, and I think they said businesses or products that are more specialized and further downstream.
Yeah.
All right, that's it for this week's edition of Industry Reactions. As always, we'll return next week with a fresh batch. Until then, stay safe.
Take care.